Good morning, everyone. Welcome to the On Time On Target Morning Brief for Invest in Fighter Pilot Precision on a daily basis. Hopefully, everybody had a fantastic weekend, and we are back at it now on a Monday morning for the last week of September, which is also last week of the quarter. So, a lot of the window dressing type maneuvers can happen in the market during the last few days of the quarter because there's lots of buying and selling that doesn't make any sense. It's really people just getting their money managers getting their portfolios right sized because you do have to report at the end of the quarter your holdings and your top, certain percentages and things. So, and again, that since that goes public, there's a lot of different maneuvers that go on towards the end, really meaning that the losers sell off even more and then winners tend to run even more because that's the window dressing that's being done. People are bailing out of like MJ because it's been losing for almost all the quarter. So now if they get rid of it, they can pretend they don't have it. And if they buy into something that's been on fire, say toast, the last day of the quarter, it looks like they had it for the whole quarter. Anyhow, I call that stuff kind of money nonsense, but it does happen and it can make some strange moves in the market towards the end of the quarter if things don't make sense. But overall for September, really kind of holding in there, if you will. Generally, your September is your worst month of selling off, and we've seen some of that. But then the last 3 days have all been in the green. This morning, NASDAQ is in the red pretty heavy, but the Dow's actually in the green. And interest rates are screaming higher, actually. I mean, we were at 1.3 last week. We're at 1.5 on the 10-year. I'll show you that once we get to that part. So what does that mean? Well, that could obviously be a headwind to housing. Do have a buddy here that's trying to sell his house in Austin, which used to be simply mention it to your neighbor that you're selling your house and you'll have 20 people show up outside. That's not the case anymore. They're actually having to lower the price on it to kind of move it, which is something we haven't had to do around here in I don't know, past year or so when everything screamed higher. So it looks like maybe some of the craze is over. The interest rates are kind of settling into maybe moving a little bit higher than they were. I would not say high overall, but higher than they were. And we'll go from there. All right. As far as our show today, we're going to talk about the wealth tax, which is being proposed by, I think, a subset of the Democrats. I'm not sure everybody's on board with this because it really is kind of a can of worms. And I'll explain it real quick. So when you talk about a wealth tax, you're taxing rich people for the sake of being rich, and any capital gains that they get, even if they don't sell the asset, then they have to pay capital gains on the increase. So what does that mean? Say you just own one house and your house moves up from, and again, these are wealthy people. So 4 million to 5 million for their primary home. They would have to, and even though they're not selling, they would have to pay tax on $1 million increase in value, right? Well, there's a problem there, right? If you have one big asset like a company or a house or something like that, now you have to pay some inordinate tax on the gain, even though you haven't sold the asset. It's like, where does that money come from? That's a problem, right? But people are saying that, it's only going to apply to billionaires and they can figure it out. Well, the downside of the wealth tax is they might have to sell things that they would not otherwise sell to come up to pay the taxes. So in the process of making it a good thing from, good thing, I'll air quote it, going into making more money for the government and paying off our debt and paying for the, services that governments provide, is we may indirectly, if you have a wealth tax, end up hitting, having people forced to sell things that normally wouldn't. You might hit your economy. So who knows? I don't actually think it's going to pass, but I think it's an interesting discussion. I think it's going to stay in discussion phase for quite some time. And there are major companies that have a wealth tax. Spain has a wealth tax. A couple more in Europe have a wealth tax. And that in itself should be like, ooh, maybe we shouldn't do it, right? If Europe's doing it. But when you look at it, we have had wealth taxes here in the U.S. Florida, when I was a Florida resident back in the late 90s, they had a wealth tax and a fairly low bar. I mean, $1 million in net worth, which, by the time a lot of people are, hitting retirement phase and moving to Florida, that's like the heart of The intangible tax, yeah, not the wealth tax there. Thanks for that clarification there, Burner. But yeah, you could hit it pretty quick, right? So that went away at some point in time. I don't think it still exists. Maybe it does. But I left there my residency there and moved it to Texas as soon as I could. But anyhow, that's where we are with the taxes. That will dominate the discussion this week. We do think the infrastructure bill is probably going to pass. Jeb Bush ended it. All right, there you go. Thanks, Burner. So no more. And are we going to do it at the national level? I really don't think so. But you never know, right? All right, that's what we're going to talk about today. No longs and shorts because I'm still having tech issues with the Schwab site where I get that information from. So no day trading today. So we'll just take a look at the overall market and how it's doing. And with that, if you're checking us out on replay, thank you so much. Make sure you subscribe, hit the notifications bell. If you want to join us in the room, you can hop in here for $25 a month. Basically, ask any questions you want during the time when we're live here, and I will make sure you get an answer. And with that, let's go ahead and get started. All right, welcome back. Here's our lineup card for today, Monday, 27 September. Standard disclaimer applies. You have to do your own due diligence before acting upon anything you hear in this presentation. Full disclaimer information is available at ototnow.com. All right, mission objectives: grow our money, protect our money, and live off our money, specifically looking at protecting our money as different tax bills will, in tax theories and tax discussions will, in my mind, dominate the news cycle for the fourth quarter. So we're already, kind of almost there, right? It's later this week is when the fourth quarter starts. But from now to the end of the year, I think it's going to be tax reform. And we talked about this. If you go back to all the way to the beginning of 2021, we said, what do we need to do? Well, we need to pass stimulus, check, we did that. We needed to defeat COVID, check, we did that. And then we kind of unchecked that box with the Delta variant. And then, of course, we're in a lot of political wrangling back and forth where, kids in school where there's 20 people in a classroom have to be 6 feet apart, but you could have 100,000 people sitting on top of each other at Kyle Field over at A&M watching a football game, and that's fine. So, we're I think it's more political than scientific at this point. Don't get excited. Obviously, I know COVID is real and people are passing away from it. But it's being politicized is my point. So that was kind of a win, then not so much of a win. Then it was the infrastructure bill was the next thing. Remember that bad boy was going to be passed by July 4th. That was going to take the market higher. It's still not passed. They hope to get it passed this week. And then it's going to be on into tax reform, which is going to be the headwind of the market. And that's where we are getting now. People ask me every day, is the market, what do you think about the market? And I'm thinking, well, it probably ends lower at the end of the year than it is right now, to be honest. That's why I'm diversifying out into some credit investments out there that you may hear me talk about, or going to safety in your portfolio. Again, looking at defense stocks, looking at your big dividend payers, a lot of the stuff we have in tech, we're just going to hold through any downturn. But if there are places to trim and reallocate to something more, set up for success in this period, then we will. I do think after we get whatever tax reform we get and it goes through and gets passed, which that may take 3 months, it may take a year, I think then the market continues back higher once we know what we have on our hands. All right. Let's take a look at Think Pipes here real quick. We look at where we are in the overall market. Speaking of the overall market, there's our big three green days we've had in a row. Still, every trend we have out there is an uptrend. So I'm saying that, let's get that shared out. Sorry. 3 days out there, really 4 or 5 days or so from the big sell-off last Monday, but kind of walked back up. So a lot of stability. And I just think we flatline from here as do we figure out the tax code. When you look at the charts going into the 5 days, so here's where we were. Futures were up nicely earlier and then been kind of selling off as people kind of process it. Yeah, it's the end of the quarter. Crazy stuff can happen. All right, let's go over to the headlines real quick. And CNBC, you can see these futures that I'm talking about. All right, so the Dow's down a little bit, and then the NASDAQ's down almost 1%. The one thing I do want to highlight before we go over to the market open is the 10-year. Yeah, 1.494. So when you really look at it, I don't know if there's a chart here. I think it'll pull one up. But yeah, you look at like a 5-day chart in interest rates, and they're really moving up higher. So again, that just shows that if you haven't refied your house and done all that stuff, the window's probably going to close on you. Not close, but you aren't going to get the fantastic deal. It's been sitting down here 1.3 forever. And that's how fast it can move basically in 2 days is what you're looking at. So, all right, let's go over to TD Ameritrade, and I'll be right back with you as we set up for the market open. Good morning, everyone. Welcome to the on target play of the day. Here is the opening bell. No trades this morning. My research is not coming up, so I don't have any particular plays for you, but some things that we'll definitely take a look at today. We have 4 screens in front of you. This is the SPY on a 1-minute chart. You can see S&P 500 is down slightly on the day. Also, you have Apple down 1%. Amazon, I don't know why it's selling off 1.5%. And then the CRPT, this is one I talked about Friday, is a new, I call it new, it's last Wednesday or so fairly new, cryptocurrency fund. So it's by First Trust. It does not appear that it's open for trading yet this morning, so it should be popping open here shortly. But again, if you see that in your portfolio, that generally means you're higher risk, and that this is a good exposure. If you remember last week, there we go, starting to get some movement on that chart. Last week we had China banning cryptocurrencies, which again is, I think, a net positive for cryptos, because it's showing that a communist government is against it. So it's like, ooh, there may be more to this, right? If a communist government is going to downright ban it, while you're seeing other countries fully embrace it. It's the national currency in San Salvador now, as Bitcoin is. So, and here in the US, I think we're grappling, right? We're trying to figure out, I'm sure there's people that are like, we should just straight ban this thing. And I'm like, well, that doesn't really work in the US, right? We don't ban stuff. That isn't necessary, that just might be bad. We wait for stuff that actually is bad before we ban it. But don't really know how it's going to play out. I do think it's a net positive. I've been increasing my crypto exposure. I'm not a huge fan, but I do think that Bitcoin, to me, is the safest, and I play that through MSTR, if you will. And then I also like Ethereum, and then CRPT really captures all of them. So those are my 3 exposures to the crypto space. All right. Get that. And it's not moving a whole lot this morning. All right, let's take a look at what is moving this morning by going into the book here. So Ethereum up 5%. Energy, it's kind of interesting. People are talking about the rates moved from 1.3% to 1.5% on the 10-year in 2 days. Well, I mean, if you continue that move over a week, you've got your interest rates up, by 2.5 to 2.5% by next week, right? Or by the end of this week. And I don't think that's going to happen, but certainly it does drive, Kramer was talking about this morning, it drives people to invest in things like oil. And, it's like, we don't generally invest in that stuff anymore, but that's why you're seeing the energy move higher. It's basically move to safety, move into stocks with high dividends, that sort of thing. Banks are up, Boeing, JP Morgan, Delta, Lockheed, Raytheon's probably not far behind. There you go. Those are my 2 favorites as far as defense stocks. Disney bouncing up after selling off some. All right, let's take a look at what's in the red. SFWJ is a spec. DD, China, pretty much selling off pretty hard. Palantir down, Netflix down, Apple down 1.5%. We saw Amazon here somewhere, almost 2%. So again, a lot of that. I don't know if that's window dressing effects already, but we shall see. So some major names really in play is the point there. All right, let's go back to CNBC and kind of catch up on where we were from looking around. So here's the futures, which let me refresh. So they're the actual numbers now. So there's where we are. Dow holding on, NASDAQ actually climbing a little bit. When you look around the world, Europe is split, Asia split. Bonds, again, that big move up. 30-year yield tops at 2%. So again, traditionally low. So that's the 30-year. This is the 10-year. So you have that straight in your mind. 30-year top and 2%. So all of those loans and things that for mortgages, that basically moved up 0.5%. So that the interest rate you're getting on your refi from this week versus last week is probably up 0.5%, which is pretty significant if you're out there trying to swing a deal. All right, oil moved up recently again, fifth straight day. Again, it's a supply constraint, so expect that to continue to move higher. That's not the summer travel thesis that's going on there. Gold and silver both up a little bit. Bitcoin, Ethereum, Ripple all up, and then that was the pre-market stuff. As far as the headlines, autos and chips, basically supply chain snags. Thinking that the autos have made their run. I'm not a big investor in the autos, except for maybe NEO. I still have quite a bit of NEO from just because we had such a good entry point on it. Again, NEO being the Chinese automaker. All right, don't see anything else that has headlines that is moving the market. And really nothing here on the news. I didn't see anything about the wealth tax in the headlines. Maybe I looked over it, but again, we're going to be talking more about that this week, I would bet. All right, when you look at the overall market, again, we looked at this on a different screen, but here's where we are. That nice 3-day move up, back up into the channel. So really everything's powering higher, but I wouldn't be quite as optimistic as I am normally about the market, just because of the tax reform until we know what we have. Once we know what we have, we can move on from there. All right, wealth tax, last thing we'll cover today, based on the market value of assets owned by a taxpayer. So again, whether it's intangibles or wealth or whatever, it's all the stuff that you own and you're being taxed on it. So again, when you look at the downside of an income tax is, well, rich people don't make a lot of income. They make capital gains, right? They own things that appreciate over time. And that's part of that wealth building process is, buy a house, let it appreciate over time. Buy securities, let them appreciate over time in your portfolio. Same thing with your 401k. All of those things are, they inflate over time as you make money. Well, a lot of those things don't kick off a lot of income. And if you don't kick off income, you're not really being taxed on them. And if you sell, then you have a capital gains tax, but you can manage it, right? If you hold it over a year, you get a reduced capital gains, favorable, I should say, capital gains tax versus your normal income. So again, all these things are set up for the rich or the on their way to getting rich, wealth builders, if you will, to where an ownership tax / wealth tax is kind of letting those that have already made it to the higher levels. And here, I think we're talking billionaires, which is pretty high level. You get up to that level, and now it's just like they think, or the theory is we can almost tax them indiscriminately. Well, I do think there are downsides to it because they are going to have to sell stuff to come up with these taxes. Because a lot of times you'll hear, and people joke, but Elon Musk is broke, right? Because he doesn't have any cash. Well, I wouldn't say he's broke, right? Because he's got billions of assets, but cash is generally the one thing you don't keep on hand when you are, serious about building wealth, right? Because cash is trash, it gets inflated away. So again, being cash rich is not the place you want to be generally over a lifetime when you're trying to build wealth. So how do you go in and put a tax code that taxes these other things? Well, it's very difficult. And of course, the enforcement of it, if I remember right, in Florida, it was a self-reporting issue. I don't know that anybody took a look at anything, but you had to, identify what kind of your net worth was and whether you hit or didn't hit that particular tax that you had for the state of Florida. So, and again, they didn't have an income tax at the time. They just had this intangibles tax. All right. So an example, kind of talked earlier about if you just have a big asset, then there's really nothing to sell to pay the taxes on it unless you sell the asset, right? Or how do you value a business? I mean, there are common business valuation models out there. I'm sure you'd be tied to using one of them, but there's certainly several ways of looking at it. So you would look at the most favorable if somebody's trying to tax you on your business. So we shall see. All right, 2023 tax year. Here's Senator Warren. Net assets over 50 billion. Okay, so not just 1 billion, but 50 billion. Tax rate, 2% of net assets in excess of $1 billion. Anything a wealthy person owns: stocks, real estate, boats, art, more. Applies to 100,000 households, I think. Okay. All right. Well, I'm sure we're going to learn more about it over time as this continues to get discussed. I personally think it will eventually fall off the table, right? And the enforceability of it might cost so much that it would not be worth trying to collect it. And that's an opinion, but we shall see. All right. That's all I've got for today. We'll continue to work our tech issues on this end. And with that, we will see you guys back tomorrow. Bye.